Hello and welcome to today's morning report. Charter process on Tuesday, the 1st of November, with me, Richard Perry, market analyst at Handtech Markets. We've got a mixed open on the European session, really. We had early gains on stocks, but that's just started to eke away again. We had a bit of positivity out early on. We've had the Chinese PMI, or throughout the day we're going to have the PMIs coming out, but China PMI actually was very strong. Came out the best it's been since 2014. Let me just show you the mainland PMI, which is, as you can see, best reading since mid-2014. So that is a positive for the market, and it's certainly helped to provide a bit of support to risk appetite today. Mining stocks, for example, are positive on the European equities, but just drifted away again. There's a fair amount of uncertainty going on at the moment. You basically bang in the middle of a load of central bank meetings. You've got this this email scandal that Hillary Clinton is still trying to put out the fire of, and also the prospect of non-farm payrolls on Friday. We've got the Fed tomorrow, we've got Bank of England Thursday. So much sort of uncertainty in these markets. I think that you're unlikely to really get trending conditions at the moment, and certainly the early gains that we saw in European stocks have just drifted away again, trading mildly lower, and you've had again a sort of a mildly negative close on the Wall Street markets last night. So I don't think there's a great deal of direction, but there is a slight element of dollar weakness, which is again starting to creep back in. Early today, it looked as though we'd been sort of settling down again, but just trading towards the low of the day. We've got the euro, which is mildly stronger, sterling, which is stronger slightly as well. Now the market has sort of started to find a bit of support for sterling in the back of this clarification of Mark Carney's future. I'd say mixed is the outlook, or mixed is the outcome, really, because market probably been hoping for an extra 3 years for Carney, who gives stability. We're going to get an extra 1 year, so he's going to leave in 2019. So I don't necessarily think that's a great outcome. It's not a disastrous outcome, but it's not a great outcome nonetheless. So sterling has found a bit of support on the back of that, but I don't expect too much upside in that. But dollar at the moment is slightly down. You've got treasury yields which having found support again and are starting to push out, so that should ultimately start to support the dollar as well, and it'd be interesting to see if that starts to play out through the dollar index. But generally speaking, also we've had this significant selling pressure coming through the oil price in the last few days. That broken support at 49.15, completed a top pattern, implied target of 46.70. We've hit that pretty much to the tick yesterday, and it'd be interesting to see what happens now, because we're basically back towards this big uptrend all the way back to the bottom in February. Now, will that uptrend hold, or will it start to break down? So very, very interesting times for oil, but certainly that has an impact as well on the sentiment for the markets. So what have we got to look forward to today? Well, as I said, we've got the PMI data today. So let's have a look. We've got UK first up at 9:30. That's expected to be 54.5. So basically it's just under what we saw last month, but last month was a very strong month. 54.5 would again be a strong month, I would say. And then the ISM data, we had an uptick to 51.5. That was better than expected last month. It's expected to be 51.7 this time out. So again, sort of a mildly positive reading there. Again, that would be mildly dollar supportive, you'd say. And late tonight, 9:45 UK time, we've got the Kiwi unemployment at expected to be 5.1%. So that takes me on to my chart today, which is the euro sterling. Now, euro sterling has been sort of drifting back towards this uptrend that it's been in since September, and it's found support. It also found support with the rising 21-day moving average, but mainly this uptrend, I think, here that we've got in place since September. Now the momentum indicators have unwound to a nice point at which the bulls will be looking out for buying opportunity. The RSI finding nice support in the sort of mid 50s, high 50s. Stochastics having turned up, MACD lines starting to plateau. So this is all pretty positive stuff for the bulls, and would suggest that sterling could well be about to come under further pressure. Now we had the couple of positive candles to end the week last week, mildly corrective one yesterday that sort of brought us back towards the uptrend again, but generally speaking I think sterling seems to be sort of maintaining this sort of buy into little dips strategy that we've had ever since Brexit, really. We've sort of been buying into weakness on sterling, and it could be that we've seen another sort of move back into support. We've got that 87.25 to 88.15. This is old long-term breakout levels that you've got to go back a long way on, back to sort of 2013. These are long-term support levels that the market is finding support above, so that's a positive. Now, on the near-term basis, you'd say that the hourly chart, there's a marginal sort of slight pivot around 89.60, which the market is again sort of coming back towards. I'd say sort of support around 89.40 to 89.80. Is your near-term level, and that seems to be holding today. So that seems to be a bit of a buying opportunity level. So if you break below 89.40, maybe the bears will start to get a little bit more sort of a drag on this one back down towards the lows of the recent move. But generally speaking, I think this is a positive move, with the momentum indicators beginning to turn positive again, and looking positive on the hourly moving averages as well. So testing upside resistance, I think, in due course. A move back above 89.80 would sort of regenerate the bulls. I think 90.15 initial resistance, then 90.45, 91.40 is this key high here from the 11th of October. So I wish you good luck in your trading on Euro Sterling again today, and I will speak to you later. Thank you.